This is an example of a balance sheet. We start with the current assets items. For the year 2018, we have cash of $5 million, accounts receivables of $15 million, and inventory of $20 million. So, total current assets will be the sum of $5 million plus $15 million plus $20 million, which comes to a total of $40 million. Then, we calculate non-current assets, or long-term assets items. We have the plant, property and equipment, or PPE gross, of $70 million, the accumulative depreciation of $10 million, and so the value of PPE net is 70 million minus 10 million, as we have to deduct the depreciation, which comes to 60 million. Therefore, total long-term assets or non-current assets is $60 million. Total assets is the value of current assets and non-current assets. Therefore, total assets equals $40 million plus $60 million, which comes to a total of $100 million. Now, we have to calculate current liabilities. We have accounts payable of $5 million, notes payable of $4 million, current portion of long-term debt of $6 million. So, total current liabilities will be the sum of $5 million plus $4 million plus $6 million, which equals to $15 million. Then, we calculate non-current liabilities or long-term liabilities. We have long-term loans of $30 million and long-term bonds of $25 million. So, total long-term liabilities will be the sum of $30 million plus $25 million, which equals to $55 million. Therefore, total liabilities is the sum of current liabilities plus non-current liabilities. Total liabilities is $15 million plus $55 million, which equals to $70 million in total. Then, we calculate shareholders' equity. We have contributed capital of $29 million and retained earnings of $1 million. So, total shareholders' equity will be the sum of the $29 million plus the $1 million, which equals to $30 million in total. Total liabilities and shareholders' equity are the value of liabilities plus shareholders' equity. Total liabilities and shareholders' equity are $70 million plus $30 million, which is equal to $100 million. As we can see, total assets of $100 million is equal to total liabilities and shareholders' equity of $100 million. Since it is balanced, so is our calculation, which means it is correct. We can estimate the balance of another year for 2019. For current assets, we have cash of $6 million, accounts receivable of $26 million, and inventory of $28 million. So, total current assets will be $6 million plus $26 million plus $28 million, which equals to $60 million. For non-current assets or long-term assets, we have PPE gross of $70 million again, accumulated depreciation of $20 million. So the value of PPE net is now $70 million minus $20 million, which is now a net of $50 million. Therefore, long-term assets is now $50 million. Total assets is $60 million plus $50 million, which equals $210 million. For current liabilities, we have accounts payable of $15 million, notes payable of $9.1 million, and current portion of long-term debt of $6 million. So, total current liabilities is $15 million plus $9.1 million plus $6 million, which comes to a total of $30.1 million. For long-term liabilities, we have long-term loans of $24 million, long-term bonds of $25 million. So, the total long-term liabilities is 24 plus $25 million, which equals to $49 million in total. Therefore, total liabilities is $30.1 million plus $49 million, which comes to total liabilities of $79.1 million. For shareholders' equity, we have contributed capital of $29 million, retained earnings of $1.9 million. So, total shareholders' equity is $29 million plus $1.9 million, which comes to a total shareholders' equity of $30.9 million. Total liabilities and shareholders' equity are $79.1 million plus $30.9 million, which equals to $110 million. Total assets of $110 million are equal to and balance total liabilities and shareholders' equity of $110 million. Our equation is balanced yet again.